right now, let us debate the merits of the flat tax itself. How good is it for growth, jobs, and stocks? We bring in Dean Baker, co-director of the Center for Economic and Policy Research, Steve Moore, the Wall Street Journal editorial board and author of Return to Prosperity, and Bob Lutz, former GM vice chair and author of Car Guys versus Bean Counters. Mr. Lutz is also a GM consultant. You know what? I want to start with my friend Bob Lutz. What do you make of the flat tax? From a business and executive standpoint, is America ready for a flat tax?
Well, I think it's an excellent solution because right now we've got a $100 billion industry or more on tax consulting, tax stuff, tax evasion, tax shelters, and everything goes away. And what you're doing with a minimum flat tax is you're letting the individual citizen decide how to spend his or her money. And we all know that when it's left to the individual, the system always works best.
So, Dean Baker, you heard the distinguished Bob Lutz, who's been in the upper end of all American business. You don't like the flat tax, Dean, and I'm shocked to hear that. What's your reaction to Mr. Lutz, especially his simplification points?
Well, Larry, this is kind of good entertainment. We're going to hear the Republican presidential candidates argue about in the primary, and then whoever gets the nomination is going to run from it in the general election because they don't want to tell people this is a huge tax increase for most middle-class people, because you could talk about tax simplification. That's a good thing. We could do that without raising taxes on middle-class people. But the point here is you're talking about big tax cuts for the wealthiest. The people have done very well over the last 3 decades, paid for by higher taxes on middle-income people. It's bad economics and bad politics.
Steve Moore, is that true? Middle-income taxes go up while millionaires' taxes go down. Is that true, Steve Moore? I'm crushed to hear this from Dean Baker.
No, Dean is trapped in this kind of static scoring. And what you have to do if you do the flat tax, and the way to sell it, is basically tell people this is a brand new model. It's a Porsche. And by the way, Bob Lutz for Treasury Secretary. Bob, I love what you had to say about this flat tax. But, you know, I think after, what has it been, 16 years or so since Steve Forbes really introduced this concept. Remember, Larry, back in 1996? I think the American people are finally ready for a big, bold idea that throws out all the rules and basically says, you know what, this is a progressive tax system, and here's why, Dean, because the people are hurt the most by our current tax structure are the people without jobs, the people without the lowest skilled people in this economy. So I think
it throws out the rules of arithmetic and economics is what it does. I mean, we've tried this, Steve. Come on, you're old enough. You've been through 86 tax reform.
Yeah,
you were through the Bush tax reforms. No, the last decade was the worst decade of growth we've had since the Great Depression.
But, Dean, what about what we did in 1986 was something, by the way, Larry, got 97 votes in the United States Senate. It lowered the tax rates, Dean, and got rid of the pollution in the tax system. That's something we should both be in favor of, and that's what the flat tax is about.
It was a mixed bag, and we didn't have a boom in growth. I mean, we had decent growth. You're very hard-pressed to look at those years, 89, 90, and we had a recession in 1990.
Look what happened from 85 to 2000. We had the biggest growth in this country in history.
No, that's not quite right, Steve, but also the tax change was passed at the end of 86. So unless you have some pretty good rational expectations, I don't think everyone in 85 knew they were going to pass that.
But Bob Lutz, I mean, let's take a flat tax, okay? We'll get Mr. Perry, Governor Perry's tax tomorrow. The Wall Street Journal is reporting it would be around 20%. Steve Forbes was about 17%, Bob Lutz. How would this affect the car business? How would this affect business spirits? Now, I remind you, the flat tax will be the same for individuals and for corporations. So, as a businessman, how would it affect life?
Well, that's fine, but it's predictable, it's even, it applies to everybody, and you want to keep that basic rate low so that people have the ability to decide how they're going to spend their money. Then, obviously, the missing revenue, as Sam Nunn and Pete Domenici proposed about 20 years ago with USA Unlimited Savings Allowance, what you do is you compensate some like all the European countries do by a sales tax, which is not regressive, it's progressive in that those who consume the most also spend the most.
So that's the Herman Cain plan. You're arguing for the Herman Cain plan, as I hear it, Bob.
That is correct, because I've seen it work. As you know, my other citizenship is Swiss. They have a relatively relatively low income tax, but all over Europe it's compensated by a fairly substantial sales tax. And that lets the individual citizen decide how he or she are going to spend their money, as opposed to letting the government decide.
What's interesting about this debate, and I think exciting from the standpoint of being a Republican myself, is, now you've got the 999 plan, which is a top tax rate of 9%. You've got, I think, Newt Gingrich is at about 16 or 17% flat tax. Now Rick Perry is the kind of liberal with the 20% flat tax. This is a great debate for the Republicans to have, to say, look, we're going to get rid of the corporate welfare in the system. And Dean, I think you would love that idea. Get rid of the Solyndra subsidies and all this stuff. And by the way, the other point that I know Dean doesn't like, but is explosively pro-growth and pro-stock market, Larry, zero capital gains, zero dividend tax. I mean, what could be better for the stock market than that?
Hey, listen, I love this idea. I mean, frankly, I generally support the Democrats, and I'm sure President Obama will have a great time running against someone who wants to raise taxes on the vast majority of working people and give huge tax cuts to Warren Buffett and the other richest people in the country. And promise growth. Go ahead, he can promise growth, but we've been there before and we haven't seen it.
Why do you just assume, Dean Baker, you're a really smart guy. You know this stuff.
Well, thanks, Larry.
Just tell me, let's say at a 17 or 20% flat tax rate, with a large standard deduction, let's say $50,000 for a family of four, why do you say that's going to raise taxes on the middle class? What's the evidence that would be the case?
Well, Larry, we have to do the exact arithmetic, so we have to see where what counts as gross income and everything. But the point is, there's zero evidence that we're going to see some explosion in growth, because we have good data on the responsiveness of behavior to tax cuts, and it's relatively little. I mean, it wasn't that long ago we had the Bush tax cuts. There was some increase in activity, I'm sure, but basically it doesn't affect growth in a big way. And if we don't get big growth and we have wealthy people paying less, guess what? If you get the same amount of money, you have to have the middle class paying a lot more.
Yeah,
That's
but Steve
pretty
Moore,
straightforward.
I thought as high marginal tax rates were lowered, that the greater returns to work and investment in capital after tax actually caused an increase in activity, and the upper end people, for example, the top 1%, now pay close to 40% of the income tax, Steve. Is that not right? I thought it was the reverse of what Dean is arguing.
Look, I think the evidence is pretty strong, Dean. I think this is the ultimate lesson of the last 30 years. The tax rates do matter a lot. That's how we got the boom in the 1980s when the top tax rate came down from 70 to 28%. Larry, Dean's saying this isn't going to raise enough revenue or that's going to shift taxes on the middle class. If you look at what happened in the 80s, the total amount of tax revenues doubled even as we cut the top tax rate from 70 to 28%.
We had much greater increase in tax revenue in the 90s when Bill Clinton raised taxes. And then we saw a big fall off in taxes when George W. Bush lowered taxes. There's a great study of all the evidence of this by the Congressional Budget Office back in the middle of the last decade. It showed that no matter what you assumed, you would not recover the revenue. At best, you'd recover about 3/10 of it. And it was done under Douglas Holtz Eakin.
There are a lot of
you're going to get growth, and that's what this is all about, jobs.
Studies. Hang on one second. I want to give Bob Lutz the last word. Bob, talk to me about a 20% corporate tax rate. We're at 35 now. I believe that the Perry plan is going to take it down to something around 20. Does that solve the competitiveness problem? And if it's territorial, does that solve the overseas cash problem?
Listen, a 20% corporate tax rate would stimulate growth and investment beyond anything that we can imagine. And obviously it has to be revenue neutral. You'd even like to see it revenue positive. But by stimulating the economy, getting investment going, getting the upper class or upper income Americans to spend their money again as they see fit, it just has to be positive for economic growth.
It was a pleasure to talk to future Treasury Secretary Bob Lutz, and it's always a great pleasure to have Dean Baker and Steve Moore on the program. Now, for more on the GOP flat tax competition, let's bring in a long-term flat tax advocate, our great friend Dick Armey. He's former House Majority Leader. He's co-chairman of Freedom Works. All right, Dick, you heard the panel. Now, here's something else. Please take a listen to what Mitt Romney's comments on the flat tax issue from New Hampshire today.
It would be nice to have a very simple and flat code, but what I want to make sure is that any kind of tax system that's ultimately put in place is one that reduces the burden on middle-income Americans. That's what I describe in my 59-point plan. There's some steps I take immediately, but then there are steps I think down the road to flatten the tax code.
All right, Dick Armey, welcome back. You heard Mitt Romney. He's very sensitive to the middle class issue. You probably heard Dean Baker before say that these flat taxes will raise the tax burden on middle class people. What should we be thinking about, Dick? What's the right answer here?
Well, the right answer is a flat tax. As Holland Robushka wrote it in '84, I reintroduced it in '94. The fact of the matter is there's no greater growth vehicle available in public policy for the United States today, and none more well proven in the world economy. Look at Eastern Europe. So if you want to say, what are the two most important things this government could do to cause growth and job creation in the American economy today, give us an honest flat tax that cuts out the double taxation and all the social manipulation, all the foolishness of the current tax code, makes it simple, decent, and honest, and cut the size of government. Now, the two must be done together. Steve just pointed out a minute ago that we doubled revenue in the 80s, but government spending went up by $1.46 for every increased dollar in revenue we got. You got to cut the size of this government. First of all, it's just a big, fat, ugly burden on the private economy. So both things done together. But anybody who believes there's a better answer than the flat tax is somebody that's simply not studied all the alternatives, and I have.
Well, what's the issue?
The flat tax the right answer.
All right, what's the issue? Mitt Romney doesn't want to go there because he's sensitive to the charge that he's helping millionaires and hurting middle-income people. What's the answer to that? Will Romney, do you think, respond to the competition from Perry and Kaine and come out with his own plan? Can he ever get over his fear that the middle class would pay more under a flat tax, with which you disagree?
Well, first of all, I would say to Governor Romney, this is no policy for the timid. Great Milton Friedman quote. Secondly, as I understand, that which is being introduced by Governor Perry, and may in fact be part of what's in the DeMint plan introduced tomorrow, along with Congressman Pence, is it's a voluntary thing. If you're in the middle class and you think this hurts you, you're free to stay with the old code. And I'm willing to live with it. Let it be a choice. Let anybody in America that believes that they would rather have the harassment, uncertainty, complexity of the current code stay there if they want to. Anybody in America that wants a decent, honest, squared-away tax code that they can get settled in 5 minutes and then get back to work, let them be free to choose. There is nothing that terrifies the left more than when the American people are free to choose between their option and our option, because they'll choose ours every time.
And if they choose the flat tax option, does that put an end not only to the tax code, Dick, but to crony capitalism, K Street lobbyist crony capitalism in Washington? Is that really at the bottom of this political dilemma?
Absolutely. The first class of tax complexity professionals are the committee men and the Senate Finance and the House Ways and Means. I was in the House for 18 years. I never once had anybody come to me and say, Dick, I'd like to be on Ways and Means because I'm interested in the tax code. They came to me and said, I'd like to be on Ways and Means because it's a good way to fund my campaigns. We'll just cut out the tax sops. Get rid of it. Drive it out of business. And then businessmen will make decisions on economic policy, finance, production decisions, consumer market decisions, not tax decisions.
All right. Well said. Dick Armey, thank you very much. It's a pleasure to hear your analysis. We appreciate it.